Hi, and welcome to my video series, focusing on the technology trends in venture capital. I'm Hannah Joyce, and I'm part of the digital technology practice for Odgers Berndtson, a leading global executive search firm. We help to attract and retain the best digital leadership talent on behalf of founders and corporates. I'm delighted to be joined today by Alex Kayyal, European Head of Salesforce Ventures, a corporate development fund committed to investing 100 million in the European technology market.
Good to be here.
Thank you. Thank you for joining me.
My pleasure.
So it'd be lovely just to kick off with a little bit more about your background, Alex. So you started in banking. How did you end up in corporate venturing?
Yeah, it's a great question, Hannah. Banking for me was a great stepping stone into what I wanted to do next. I was there seeing the kind of boom and the bust of the stock market crash, really working on kind of IPOs and M&A. But I kind of always knew banking wasn't going to be forever. And so actually the intermediate step between banking and getting into venture was actually getting an MBA. So went to Harvard for 2 years, which was a phenomenal experience. And then was always interested in tech and entrepreneurship. So my path was actually first as an entrepreneur, and then as a VC, and now as a corporate VC. So I've kind of seen it on both sides of the table, which has been a lot of fun. But I think fundamentally the most exciting part of my job is really backing entrepreneurs, and that's kind of what I've had the privilege of doing in the last 5-7 years.
Amazing. And having done sort of both sides of the fence, what do you see as sort of challenges and opportunities of corporate venturing versus sort of traditional institutional funds?
Yeah, it's really interesting. I think the best entrepreneurs really just have access to capital. If you're building something disruptive and you're a leading entrepreneur, fundamentally a lot of people want to invest in your business. And so I think entrepreneurs recognize that, and they say, you know what, I need to think about who I'm going to have as an investor and what value do they bring. And so that's where kind of corporate VC is a great supplement to traditional capital. And I think astute entrepreneurs recognize that difference. And it is about that complementarity. I think different investors add value in different ways, both in terms of whether they're strategic or financial, and also over the lifetime of a company. As a company matures, they need a different set of skills and experiences than on the earlier days. So for us, the way we think about that is we like to co-invest with traditional investors, and add value in ways that a traditional VC can't. So for Salesforce, that's all about access to our ecosystem, access to kind of the advice that we bring, given Salesforce pioneered cloud computing.
Absolutely, yeah.
And a lot of the credibility. Salesforce is a very widely respected brand in the enterprise B2B world. And so startups in the early days, when they're looking for access to customers and that stamp, it works really well kind of side by side with traditional capital. So, our belief is that the best entrepreneurs always have many, many options. And we've been privileged to be chosen as a partner in that journey for many companies.
And a USP of Salesforce Ventures, obviously, is that you're a global fund. But what what sort of advice would you give to CEOs looking to scale a business?
Yeah, so we've kind of seen it all in many ways. We started in 2009, and as the name suggests, it's the kind of corporate venture arm of Salesforce. And we've now grown that to a global portfolio. In Europe, in October of 2015, we announced the 100 million fund, which you mentioned. And I think, and we also have a presence in Japan, so we've kind of really grown up through that geographic expansion of the portfolio today of 160 companies.
Wow, amazing.
All over the world. So I think, scaling for companies, it's all about meeting those next milestones. I think when an entrepreneur starts their business, it's really just an experiment. They have this idea, this hypothesis that they want to test. And it's all about going on the market and validating, is there really something there? And as you evolve from that initial conception into actual product market fit, then the question becomes, can I get to 1 million of revenue? Can I prove that there's enough people in the market that are willing to pay for this? I always joke with CEOs, it's almost like, building a $1 billion startup that's had a successful exit. It's almost like grabbing different monkey bars on the playground, if you remember from being a kid. And it is really all about that. You kind of just need to, it's micro steps. Obviously, you have to have a big vision, really thinking about, as an entrepreneur, what it is you want to go build for the long term. But you have to break that down into manageable components. And that's where different funding rounds can help, because you start with maybe some angel friends and family funds, you then progress to seed round, and then Series A and on. And that's where we get involved. Our sweet spot is kind of Series A and up. And I think it's really about providing a great product, really thinking about how you're serving the need of your customers, we've seen a lot of successful businesses today think of themselves in the enterprise world really as they used to in the consumer world, which is how can consumers love what it is you're building, and that's transitioned now to the enterprise world. So a big focus for us when we're thinking about companies to back and seeing that scale is, have they been able to really define their customer segment? Are they getting a lot of traction? And how big is that market for them to go get?
Absolutely, that's critical. And so, how much of Salesforce Ventures' focus is actually around, M&A opportunities for Salesforce Corporate?
Yeah, great question. It's funny, that's the number one question I get from every CEO, so I'm glad you asked it. Salesforce has been, as a company, very innovative, has grown a lot since the company started in '99. Both organically and inorganically. So M&A has been a key part of our growth. We've had, last year was a great acquisition year for the company. Acquisitions like Demandware and Quip as examples.
Absolutely, yeah.
But Salesforce Ventures informs that M&A strategy, but it's not there for the M&A strategy.
Okay,
so our goal is to help companies become independent, big businesses. Sometimes, it could be a chance where the stars align and there's a fit, but it's really the minority of the cases. And, the vast majority of all the businesses we've backed have become independent, standalone companies, and that's kind of the sweet spot for us. We don't want expectations on either side of an M&A process, and if you look at the quality of the companies we've backed, there's no funny terms, and I think the one danger, and I won't name any corporates, but I think historically some corporate VC has had kind of stringent terms as part of an investment where it limits M&A options, there's a right of first refusal, and we've stayed clear of all of that because fundamentally we want our companies to be successful, and you've seen that with exits to companies like Oracle, even Amazon, Yahoo, you name it.
Absolutely, yes, brilliant. And Salesforce hosts this amazing conference every year called Dreamforce. I'd love to hear some of the trends and themes that emerged from this year's.
Yeah, so if you haven't been to Dreamforce, I highly recommend it. I've been the last 2-3 years, and it's just phenomenal. Just to give you some context, it's 150,000 people that show up in San Francisco. And it's kind of a great mix of enterprise software, innovation, and just a ton of fun.
Amazing.
So for us, it's really a chance to really highlight and showcase all the great things that Salesforce is doing in the market. It's a great way for us to bring all our customers together. I think some of the themes that came out of that are, this year we released Einstein, which is, Salesforce is kind of a customer success platform that's really been number one in CRM, but now it's all about adding intelligence to that, and that's what Einstein is all about, kind of bringing AI for all our customers. So that was a big theme. I think very interestingly, seeing our customers interact with each other and kind of exchange ideas, was phenomenal. So that was a huge, exciting kind of seeing the community that has really developed out of this ecosystem. Enterprise software 20, 30 years ago wasn't that exciting.
Yeah.
Some would argue it still isn't. I disagree. I think it's very exciting.
So do I.
So you see the buzz in San Francisco with Dreamforce and all these people just engaging and kind of being so excited about how their businesses are being transformed. So that was a big theme. And I think the third one would be Trailblazer, which is this concept that we're seeing companies learn about how to best use software. So Trailblazer is a really fun, it's kind of almost gamified way of learning about, and it can be anything. It can be how to use Salesforce, it can be how to hire a great team. This kind of corporate engagement from the standpoint of education and really learning. We really believe that that's a lifelong thing, not just something you kind of learn in school and that's it. And so those are just some of the three kind of highlights for me. And obviously, it's a lot of fun. We had this year U2 as a keynote band. So come next year, I don't know who it'll be. But it'll be a lot of fun.
Super. And you have a fantastic portfolio here in Europe. One of them sort of sprung to mind was Digital Genius, which I believe is an AI solution for customer services.
That's right.
I'd love to hear sort of from you what you believe some of the opportunities for artificial intelligence are that perhaps consumers or corporates don't yet recognize.
Yeah, it's a super interesting question. In many ways, we're entering a new era, right? If you think about artificial intelligence isn't new. If you go back to literature the past 20, 30 years, you'll see PhD students have been studying this, developing AI. I think what's changed is kind of 2 or 3 big things which really opens up this realm which we're seeing today. One, is just the amount of data that's available, and AI algorithms require a lot of data to be trained, right?
Absolutely.
So all of a sudden you have access to that. And then the second one is just a sheer raw computing power, right? Crunching these algorithms and developing solutions is very resource intensive. And now the scale and power of computing has allowed us to open up this. So I think the one thing to know is that it's not new, but we now have that combination of factors that really enables it to kick forward. I think one big surprise for people is that AI is actually here already. It's this big kind of scary word, and I think some people think it's this coming in the horizon, where actually we have it today. And so, some examples of that are every time you buy something on Amazon, it suggests other things you may want to buy. Google suggesting in the search box what you may actually be searching for even before you finish the sentence. Those are examples of AI today. And I think that's very exciting. I think one of the challenges that we'll see in an opportunity in the enterprise space is in the consumer world. There's a few big companies, the obvious ones, Google, Facebook, even Amazon, one could argue, that has a lot of that data. And so creating AI applications in the consumer space as a startup, I think it's tough. If you think about the enterprise space, it's actually the complete opposite. All that data is typically housed in either within the company themselves. So if you think about a big business, they'll have access to that data. Or it'll be accessed, through something like a Salesforce. And so I think that's where the big opportunity is, where all of a sudden in enterprise, AI can really have a meaningful impact in transforming industries completely. And so that's something we're very excited about. Also, Salesforce as a company is going to make Salesforce the most kind of intelligent CRM solution as a result of that, to really democratize that process. That's part of the goal here. And I think one thing that people don't realize today is that they think of jobs as being completely automated and that certain functions will get automated. I think that's the wrong way to think about it. I think the better way to think about it is that every job in some way, shape, or form will have automation. And the question is, how much of your job gets automated? And I think that's a distinction that today is lost a little bit when you're reading about AI, and companies need to think about it in those terms, which is, you get in a scale of 0 to 100%, how much of someone's job gets replaced.
Absolutely.
As opposed to does the entire job change. And I think that's where increased productivity can happen.
Absolutely. And we see AI as an enabler, at least at stage one anyway.
Agreed.
And historically, if we look at the European market, there's been a lot of B2C consumer-focused investing, and obviously your main orientation is very much towards enterprise. So I'd love to hear on sort of your view of the enterprise market in Europe and really how that compares to the US. Yeah,
this is one of my favorite questions. So I first came to London 12 years ago. The word entrepreneur back then was a dirty word. It was synonymous for unemployed.
Yes.
And if you told someone you're an entrepreneur, they'd say, I'm sorry. So we've come a huge way since then. Entrepreneurship is celebrated and championed. And it has, the first wave of that in Europe was definitely in the consumer space. So a lot of the success stories, whether it's Skype, Zoopla, Spotify, have been on the B2C side. We would argue that's looking in the rearview mirror, and if we look ahead, the innovation that's coming out of Europe is in the enterprise space. And I think that's just a maturity curve. I think initially there wasn't as much capital for a B2B entrepreneur to start a business. Part of the reason why Salesforce committed this $100 million fund is because we wanted to commit to that funding gap, and the level of innovation that we were seeing was night and day versus a few years ago. And so we're very optimistic in terms of that change. I think some of the research institutions and engineering talent that exists in Europe is a phenomenal opportunity for that. And I think the other big thing is that we're starting to have these success stories which really act as a lubricant in this wheel, right? Startups and entrepreneurship, it's all about, we talked about at the beginning how you might, as your first round of capital, get funded from friends and family or angels. And that, having successful entrepreneurs that have sold their business in the enterprise space, had big outcomes, and then putting money back into the ecosystem, that is the best way to create that, both from a capital perspective, but also from a training perspective, because as these companies grow and scale in Europe, there are also training grounds. I think you asked about the difference in the US. One of the great things about the US is that there's a lot of billion-dollar-plus SaaS companies that have come in the last 10, 15 years, where VPs of product, VPs of marketing, VPs of engineering are all trained and incredible experience who then spin out and go start companies.
Yeah.
So those are the kind of, that's the one area we probably still need to do a bit of work in Europe, is that there isn't as much of that culture of giving kind of back in the same way. So I think we've made tremendous progress. The opportunity set is here. The other challenge is it's very fragmented. So in Europe, I think the last stat I read was in the U.S., something like 90% of VC activity is San Francisco, Boston, and New York. 3 cities. You come to Europe, and it's we've got investments in 9 different countries across Europe, and that just shows you how fragmented it is. And even within a country, you've got little sub-pockets depending on the size of the country. So I think the challenge, unlike the U.S., in terms of the contrast, is it's not as concentrated, and so we need to work doubly hard to make sure that there is that community, both for entrepreneurs and for VCs.
I suppose that's an amazing opportunity, given the cultural nuances, though, and diversity of thinking and culture as much as anything else. For
sure, and I think the nice thing about it is, regardless of where these companies start, they're all moving to the U.S. And I think that's important. I think gone are the days of being able to build a local champion. In the consumer space, some of these markets are much more localized, and so if you build a real estate website, you're obviously going to focus on one country, and you can build big enough business. But if you're building an enterprise application, you can sell to customers all over the world. And so being global and going international, and we're seeing that collapse in terms of at what point companies decide to embark on that journey. So the nice thing is that companies are retaining this cultural kind of uniqueness. We have a company in Spain, we have a company in France, we have a company in Holland, UK, you name it, and all these companies do maintain their kind of key secret sauce, which is part of that culture, and then obviously expand internationally, and the US tends to be the first market for that, really to get access to the market share, and that's a really important trend as well.
Well, it sounds like Europe's a great place to be. So, Alex, thank you so much for your time today. Really enjoyed speaking with you.
Thank you for having me.